generally the more you learn, there's some research that shows basically the more someone is knowledgeable about Bitcoin, the larger share of the net worth it ends up being. So my general view is that if there's a time where it makes sense for you to increase your holdings substantially, I'm not the one that tells you that. You're the one that figures it out for yourself and decides that your level of understanding or comfort with the asset has increased, and therefore a larger position might be right for you.
Hey guys, welcome to Everyday Finance. The global financial system is about to undergo a fundamental change as Bitcoin is poised for a huge breakout. It is no longer a speculative trend after 16 years of development and adoption. Rather, it is laying the groundwork for the future of the financial system. Its 2.1 quadrillion satoshis, which are highly divisible and scalable for everything from microtransactions to institutional scale investments, are its true power, not just the fixed supply of 21 million coins. Because of this, Bitcoin is far more accessible and flexible than any other asset or currency. Bitcoin is steadfast on its core principles of decentralization, superior security, and artificial scarcity, in contrast to erratic altcoins propelled by transient hype. It acts as a reliable, consistent, and resilient financial anchor in a world engulfed in debt and inflation. Bitcoin is changing from a digital asset to a worldwide financial infrastructure as its adoption picks up speed. This is only the beginning, says analyst Lyn Alden. Bitcoin has the potential to spark the biggest financial crisis in contemporary history once it reaches critical mass. Here are more insights from Lyn Alden.
There's a danger at buying too much that exceeds your conviction level or your volatility tolerance, because you're more willing to get shaken out of your position at a loss or during a big sell-off. And so I generally I don't think it's right to kind of rush in more than you're comfortable with. I think initially the pretty low-hanging fruit is to get off zero. That there's a lot of there's a lot of right answers for how much Bitcoin you should have. But I think that if anyone who looks into it generally finds that the zero is not one of the right answers. So I think get off zero. And then there's a couple steps you can make. You can experiment with it to some extent. You could buy some from an exchange or a brokerage and then pull it into your own self-custody and try sending a transaction with amounts that you're comfortable with, given the research, with like a simple mobile wallet, and you can graduate toward more secure options for larger amounts if you decide to go that route. You could also invest some time into reading a handful of Bitcoin-related books. It's not necessarily the first thing you want to do is if you want to get them into Bitcoin, you don't necessarily shove them a 400-page Bitcoin book. But if someone, for example, watches this podcast or watches your series or is otherwise interested in the asset, I think the next step is to spend a weekend, read a couple high quality sources on it, so that you get more of the details than we can cover in a conversation like this, and then consider getting off zero. And generally, the more you learn, there's some research that shows basically the more someone is knowledgeable about Bitcoin, the larger share of the net worth it ends up being. So my general view is that if there's a time where it makes sense for you to increase your holdings substantially, I'm not the one that tells you that. You're the one that figures it out for yourself and decides that your level of understanding or comfort with the asset has increased, and therefore a larger position might be right for you. I think so, especially on a risk-adjusted basis. It's not as early as 2011, but it takes much less risk than it did in 2011. And one way to think of it is that the Bitcoin network is something like 0.2% of global assets. Gold is something like 2% of global assets, so about 10 times bigger. And all the other assets together, so savings accounts, bonds, real estate, and equities, and private businesses, that's the other 98%. And so one way to think of it is, what is the total addressable market of a portable, leading type of money with no long-term supply growth that you can self-custody yourself, or that you can send to anyone in the world in seconds or minutes, depending on what layer of the network you're using. I think that's worth at least several percentage points of global assets. Some people have higher estimates, and they're not necessarily wrong. I think 0.2 is still early. So I would advise people against unit bias. So we look at it as 21 million Bitcoin, but it's actually 2.1 quadrillion units in the actual code. That's the actual unit. It's just the underlying Satoshi unit that we call it now. Satoshis is still very cheap, and I think the network is still very small compared to what it could become and what it should become, as long as some core tenets of it keep working as expected. The second thing I'll say is actually about Bitcoin rather than the existing system. If people ask me one thing I wish they'd know that I don't see commonly mentioned, um, there's a natural tendency to assume in technology that new things displace old things, that anything newer is going to be just better in every variable than older things. So new computers generally better than an older computer, for example. Newer software is better than software from a while ago, with some exceptions. Um, and so people naturally assume that, okay, Bitcoin is cool, but it's 16 years old. Why shouldn't I assume some of these newer ones are better? And my general answer to that is the main exception for that rule of newer technology being better is communication protocols. So things like Ethernet, that's 50 years old. We're still using Ethernet. USB, something like 30 years old. We're still using it. Simple mail transfer protocol, something like 45 years old, still going strong. Internet protocol is so far in the age of the internet, the answer for how long a communication protocol lasts once it becomes dominant is indefinitely. We don't really know how long these things last because they're going on decades and they're still just as strong as they ever were. And some of them gradually update over time. So Ethernet is faster than Ethernet from 20 years ago. USB 3.0 is faster than Ethernet 1.0. And what they have in common is that they achieve network effects, and they're by design, they're purposely simple, and things that change more rapidly are on the edges of the network or on higher layers of the network. And Bitcoin, I would generally argue, is that 16 years in, it's the dominant communication protocol for money, and it exhibits very similar dynamics or similar aspects to those other types of communication systems. And I generally think that's the right way to conceptualize it as a technology, not as something that keeps coming and disrupting the prior thing, but something that, comes out, gets tested, wins whatever early dominance it needs to win, achieves, large market share, and then becomes a pretty persistent part of our digital lives.
The wealth of wage earners and savers is steadily diminished by inflation, which also subtly transfers power to institutions, corporations, and debtors. Bitcoin offers a completely different route, an escape route from a broken system, as regular workers seek raises that hardly ever keep up with growing costs. Unlike fiat currencies, its fixed supply makes it a genuinely inflation-resistant savings tool. Bitcoin has progressed past its experimental stage with a 16-year track record and uptime superior to Fedwire. It is now recognized as a valid, decentralized store of value. Although it cannot directly address wage stagnation, it gives people the power to protect and even increase their wealth independently of central banks and inflationary policies. Bitcoin is more than just an inflation hedge, so forget about gold and other conventional hedges. It is a total break from the system of fiat money. It can decline even when interest rates increase, and it doesn't always follow CPI data. However, the journey from an outsider asset to a potential global reserve is not without its volatility. Bitcoin's greatest advantage in a society dependent on money printing is its fixed supply. Although there are risks involved, the rewards are historic. The financial revolution is already underway, and it won't wait for doubters. As Alden makes clear, let's examine a few more Lyn Alden interview clips.
So a hedge generally has a pretty specific meaning in finance, which is something that pays off at the moment of a certain thing you're worried about happening. So for example, if you own the S&P 500, a hedge might be that you buy put options on the S&P 500 that pay off if the S&P 500 goes down. That's a very specific hedge. There are other hedges that are maybe not that specific, but there's still very high probability to pay you at the period of time of something you're concerned about happening, kind of like insurance. Bitcoin, I don't classify as a hedge per se, because there's multiple variables that go into its price. and it doesn't have a very high correlation with consumer price inflation, uh, especially because the way that the market works, when it sees consumer price inflation coming in higher than expected, their natural reaction is to say, well, the central bank is going to have to raise interest rates. Then they're going to have to try to harden their money. So maybe I should sell some of these, other types of assets, or my liabilities might be getting a little bit harder because they're going to raise interest rates. And so I wouldn't classify it as saying if you're worried about CPI inflation, this year, Bitcoin is not necessarily going to be going up and down at the right times for you. Um, I, I go back to that emerging store of value thing, which is to say that there's this network. It's the best in class at what it does, and it has a fixed number of units. In contrast, all these different fiat currencies in the world, of which there's over 100, all inflating in supply at different rates, and that Bitcoin protects you from that long-term monetary debasement if you're willing and able to withstand some degree of volatility along the way, because you're also dealing with the fact that the world is gradually understanding what this asset is. Another thing I like to point out is that in order to go from worth zero to worth trillions of dollars, Bitcoin needs upward volatility. And any upward volatility is going to attract speculators and people who buy it on leverage. And eventually that can get overdone for periods of time. And then unfortunately you get downside volatility. So there's no realistic scenario where you get upside volatility that we want and that the network needs in order to get large enough, without those periods of washout and downward volatility. And that's why it can seem like a speculative asset. I also think that there are certain assets that can seem speculative if you haven't researched all the properties. So years ago, people said, I think the big tech stocks are speculative. Well, if someone did a ton of work and said, I have a pretty sound thesis why I think that these things are going to get bigger than anyone thinks, that they're solving bigger problems than the average person seems to realize. And here's my reasoning, and I'm looking at their balance sheet and their fundamentals, and here's the price to earnings multiple I'm willing to pay. Whatever research they do, they're not really viewing it as a speculative decision unless they're leveraging it or taking on too much risk with it, with the thesis. And Bitcoin is similarly. I think that there are a lot of people that they haven't ever sent a Bitcoin transaction. They haven't really analyzed what are the network effects involved that can differentiate it from other assets. How does mining and nodes work? How does the network work in principle? Why is it different than a different cryptocurrency? What are the trade-offs if you change any of those variables? There are a lot of people that, for a variety of good reasons, haven't done the work on that. They're too busy being a doctor or a mom or a chef or any number of things that life throws at us. They just, like, I can't tell you everything in my car how it works either, right? So there are a lot of people that just, for whatever reason, haven't done that, and some subset of them will call it a speculation, which I think is generally not the case, other than, again, at the really early stages when there was a higher probability of failure, I think. Because one of them is kind of a repeat, but I'll rephrase it, is I think that the biggest thing to realize is that the baseline for price inflation is not zero. It's negative because on average we get more productive at things, not less productive. And therefore, the thing you always want to focus on, the question you want to ask with most financial assets is, what is my rate of dilution? If I'm holding dollars or any other currency, look up the long-term growth rate of that thing you're holding, offset by whatever interest rate you expect to get on that holding, and that's your net dilution. So if your money supply is growing up by 7% a year and you're getting a 4% interest rate, you're getting diluted by an average of 3% per year. Your share of the network, aside from new income that you're actively working for, just your passive share of the network is shrinking, and it means someone else is growing, someone else is getting that. And so that's number one, and that applies for multiple things. That applies for if you're holding gold, your long-term dilution rate is somewhere around 1.5%, and you can look that up for yourself. If you're holding equities, sometimes they're issuing shares, sometimes they're buying back shares. You can also think of it in terms of market share, or other companies kind of taking market share from your company on average, or your kind of national stock index. And the same thing with real estate. If you own real estate, there's some degree of new growth, that like the new construction that's happening. And so your share of, all houses that exist is shrinking, which can be a funny way of looking at it. But I think if you apply that lens to everything you could own as savings, that's a really important baseline. So CPI is not your target. Not getting diluted is one of your main targets.
According to recent market indicators, Bitcoin may be poised for a significant surge in the second half of 2025. Technical and on-chain data present a convincing image of an asset that is maturing and getting ready for another breakout. The US versus offshore exchange volume ratio has reverted its early year downward trend, according to analyst Axel Adler Jr. Such changes in trading patterns have historically preceded significant bull runs, indicating a resurgence of interest from regulated US-based players, often an indication of increasing institutional involvement. Technically speaking, a bullish signal that last surfaced prior to Bitcoin's breakout above $60,000 has just been confirmed by the 90-day simple moving average of the cryptocurrency crossing above the 365-day average, the ultimate sign that momentum is regaining strength. However, on-chain fundamentals support it. Due to a supply shortage, exchange reserves have dropped to 2.43 million Bitcoin, the lowest since 2018. With a stablecoin supply ratio, SSR, of 14.3, Bitcoin still has plenty of liquidity. Lyn Alden says these are the signs of a maturing asset, ready for an institution. Bitcoin's recovery of the monthly VWAP as support, a level it hasn't held since January, supports a $90,000 breakout. However, be cautious. Analyst Joan Wedson warns that a bull trap and brief correction may occur if buyers move too quickly past $86,000. With technicals aligning and exchange supply declining, Bitcoin may prove its worth as a digital store of value. Investors are now more concerned with when a move will occur and whether they can secure enough of the declining supply in advance than whether one will. Lyn Alden says Bitcoin is an escape from fiat, not just an asset. Thanks for watching.